Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 16th, 2019. So today we had, I'll get to the levels in 60-minute charts in a second, but we had about a 1% up day. Yesterday, if I recall correctly, I said I was indifferent. We had closed or hit some of the bounce targets that I had, and the day before I was leaning towards more upside. Yesterday I said I was ambivalent, could go either way, and I saw about maybe 1% or so more upside on the market before we reverse, if this bearish scenario, bearish case that I've been favoring will stay intact and remain healthy. We'll see. So that's exactly what they gave us on QQQ, 1% up. SPY a little lower, a little under 1%, 0.9%. All right, so let's just go over what happened today. We broke out. Here's that channel on SPY. So we broke out of that this morning and ran. Actually, yesterday. Oh no, I had modified that trend line in the last video, and there it is on the futures chart. So we broke out of it today, popped up, and then closed right a little bit above resistance here. Let's get to the 60-minute charts because those are the levels that I've really focused on lately. Let's jump over there. Okay, here's the SPY 60-minute chart. You can see resistance of right around 289 or so. Hold on, let me flip boards here. I've got the purple lines right here. So that was the purple lines were my bounce target zone for this bounce. The yellow lines being for the previous bounce. Although this purple line used to be a yellow line. That was, again, if you're just catching up, when we were back here, I was looking for a bounce and had two lines there, and we stopped cold at the lower. This time around, we went up to this uppermost bounce target still, so it was essentially a bounce target range from here to here, and near perfect rejection, pretty impulsive rejection. But again, we're not too far off it now, so we'll just have to see how tomorrow goes. You can see we came right back down to the former. This was resistance here, 287.30. Resistance once broken becomes support, so that's where we pulled back to. So let's see what happens tomorrow. I still favor reversal here, so my expectation would be a red day tomorrow. We'll see what happens. As I mentioned, if and when we continue to, if we take out this level and move up, it's not the end of the world. But as I said, this is where, which I did today, I would be adding back the last of the shorts that I covered recently down here. And I did that, and I will not add as we continue, if we continue to rise up to this point. It won't change a whole lot unless we start to get above this level here. I don't expect us to get there, but anything above there is probably going to open the door for a pop to new highs. So again, let's just be clear. I favor a continued reversal from here, but we'll see. If we pop tomorrow, like I said earlier today, and I mentioned this to members of the site in the video, it was a midday session about scaling into positions. If that's your trading plan, professional experienced traders usually only scale up on a position, meaning they add to a position at less favorable prices, but that's because a trade is going in the direction they anticipate. It means they're right. You go back to Jesse Livermore, Reminiscence of a Stock Operator, one of the best books written in trading. He talks about that, adding to a position that is going your way, again, because it's confirming that you're right. Whereas retail traders, new traders, typically scale down on a losing position. So in other words, if you are shorting the market, you have to have your own trading plan, but mine again is not to add any more short exposure, and I'd be more concerned if we continue much higher as to where to exit this short exposure right now. So like I said, the only time I will add down or scale down on a position is if it's a predetermined scale in, like I said here, where I'll scale in, cover, and then add back if and when we get there. And had we turned down at any of these other levels here and started, charts convinced me, I would have just added back at less favorable prices. So to be honest with you, I'm happy what I got today, getting these shorts back in there at some good prices. And if they take me out, then we're talking not a whole lot where I'll start to scale out from this point today where we hit at the highs. We're talking another, if I can grab it right there, it was close enough, there it is. That's about another 1%. and the highs are only from there another 2% away. So I can tell you this: I would most likely have some positions unless we came up here, and we'll see. I always say this: the charts are dynamic, and so is my analysis. We may power up. How does it look? What's breadth look like? What stocks? Is it just a few stocks leading the market up? But hopefully we'll get a down day tomorrow, and that won't even have to come up. And if it does, I'll cover it at the time. So those are the levels to watch. That's your next overhead resistance. This was support here, 287.30. Kind of sliced through there. I'll tell you what. Let's just flip back to the daily charts and make it pretty clear that we had a pullback here to 281. 281-ish level, which, as I mentioned many times, was a very big level, very significant technical level. Capped the advances, those 3 advances back in the fourth quarter correction. Capped a lot of advances here. Traded through it, but none of these closed above it on a weekly closing basis. We had finally a breakaway there, and so that was a support level that I'll tell you I would have been shocked if the longs didn't step in and buy, and if shorts didn't step in and cover. And that's again one reason that I was, reversing to long in my active trading, closing out the swing shorts. But again, that was my plan and remains my plan. And so if it plays out as expected, we get something along these lines. And if it doesn't play out as expected, well, nothing ventured, nothing gained. We'll get the next one. Certainly had some profitable shorts and longs over the last couple of weeks here. And let's look at QQQ. And again, I'm turning where I'm going here is now I'm turning my focus. We'll keep an eye on the overhead levels, resistance levels I just showed you that we failed at today, but more so for the next sell signal now at this point, or the next objective short entry is going to be a break below that 281-ish level on SPY and the 187, or basically the 178. I'm sorry, the 178 level on QQQ. So essentially a break below the recent lows. So we'll see how it pans out. As I mentioned in the video for members earlier today, actually, you know what? I think that's public. I put it on the site as a public content. You can come in and check it out there. But hard to say what's going to happen tomorrow in the next few days. Obviously tomorrow's Friday, so we'll be heading into a weekend. But if we happen to see a very impulsive fade over the next few trading sessions, maybe into early next week, of these 2 candles, these were big green candles. I can tell you that. I can tell you it probably cleared out a lot of short interest for the what I call Johnny-come-lately shorts, those that were shorting here instead of around the breakdown. They got squeezed out today. I'm sure there's a lot of longs that piled back in. This was, of course, the biggest correction that we've had so far this year. And as I said, great buying up. If if you're of the mindset this market's going to new highs and you didn't buy down here, then I don't know when you buy. So we'll see. If the market's going to new highs, I should clarify, you could still get in, but it's not objective. You just had 2 strong days. You're coming up on significant resistance. So let me highlight that as well for you. Remember on QQQ in 2018 we had a double top high here. We came up, tested it for a few days, broke out. We broke out, held above that level for a while, but we didn't go anywhere and the breakout failed. So that 188-ish level, which was resistance and then broke back down again, is now was support once we broke it here. It was first resistance once broken becomes support, and then when it was broken again, it's now resistance. So that's where it's not as objective to add longs right here, because now you're coming up on resistance. You can have a back test at that level, and let's not forget both QQQ and SPY are still comfortably off their highs right now. So at this point, we had either a double top failure in SPY or a failed breakout in QQQ, and that's why I remain intermediate to longer term bearish now until and unless we can power back up here. Because as I laid out in advance before this correction even started, my bullish scenario, even though it's not my preferred scenario, said it would be very healthy. I said the markets were just too overbought right here, way too extended, both QQQ and SPY, with divergences to make a sustained breakout and run. Just too much. However, I said it would be healthy for the bullish case if they come back in, correct, and maybe work off. They could, this was a correction. Could they power up? Yes, but all the better if they slogged around sideways for a while, really, cleared out, well, we've cleared out the oversold readings, I should say. That cleared out pretty quickly with that sharp move down. So the technicals are there now is what I'm trying to say for a clear and sustained breakout and rally above there if that's what the market wants to do. So again, if you're long, looking to get long and ride out a rally into the end of the year or some point this year, then maybe scale in, but I wouldn't go all in until we clearly put the highs in the rearview mirror and SPY. And if you're short, then like I said, right now you had a very objective opportunity to add today at today's highs when we hit those levels. Let's go back to those again. 280, the 289-ish level, and then on QQQ, I was looking for a bounce up to about 185.53 upper end, and that's pretty much what we hit. And I mentioned today in the trading room too, or I'm sorry, in the earlier video, that we had that previous reaction high, and I refer to this as what we call momentum fueled overshoot. You had a strong rip coming into that level, and it's not only uncommon, it's very common when you have a security, whether it's QQQ here or an individual stock, with a strong upward trend or a sharp downward fall, that you will briefly overshoot the support level that will hold, or you'll briefly overshoot the resistance level. But when you look close enough, I mean, that's it. We pretty much failed there. And that's it. I can't add much more to that. We're not exactly overbought, but getting close to it on the 60-minute charts. PPO is starting to turn down a little, but let's not even make too much more of it right now. This is to be continued tomorrow. So my favorite scenario, which says we go down, and if that's the case, then what I'd expect is as we continue down from today, we'll start to see the selling accelerate, and then I think we'll go ahead and break right on through those that 178 support level. And if we do, we take out those lows, then it's get out of Dodge time, I think, for the longs. I'll tell you this right now: if we fade these two big green candles, this is what I mentioned earlier today as well. If we fade these over the next few trading sessions, that's going to be a knife through the heart of longs and bulls that bought this dip. So let's see what happens, and let me see if there's anything else we need to cover before we wrap this up. And we'll look at the futures real quick. This is ES, 60-minute chart of the ES E-mini futures, S&P 500 E-mini futures, that is. And as I zoom in tight, since the top here really I was tracking these descending megaphone type patterns right here. You had here's a downtrend off the highs right there from the highs in the S&P. And there's the downtrend line. So that's really the megaphone pattern. I had added recently a minor trend line here that was taken out today. I'm going to remove that one. This was the original pattern I had. And so now we've hit the top of that, which again is downtrend line resistance for ES, and as well as that had that 2892. It's a pretty decent resistance level. It was former support. We broke it, backtest, 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 and that was also a level that I've been highlighting recently. So we failed at intersecting resistance today. It's not a strong failure. We hit it, pulled back a little. So what the futures do overnight and into tomorrow could provide us some clues to where we're going next. So that's it. Obviously a pop above both those levels, an impulsive break would be pretty bullish. Takes us up, but we still have resistance here about 27.1950 on ES. And remember, it was this divergent low, as well as the fact we fell to those pretty key support levels on the daily chart that were the catalyst for this bounce. As I said before, nothing goes straight down. You're going to get, at least early, especially early in a corrective wave. Let's just say this is the start of something much more. You don't just come up to making all-time highs in one of the most resilient, bulletproof markets in history and then turn around into waterfall selling. Go back to the daily charts. I'll show you what I'm talking about. That's not how it looks. Tops, you come in, you grind around for a while, you start to move lower, you have some kickback rallies, you work your way down, and at some point then you get the waterfall selling. So we'll see how this one pans out. Is it a one and done correction? I don't think so, because most, like I said, most end in at least an ABC. They don't have to, but that would be the first wave down. This might be a B and this might be a C, and then we could still add the new highs. So we'll see. And since a few more minutes I'll cover here. We're only at the 14-minute mark. Just look at the big FANG stocks right now. Microsoft probably looking the best of the lot at this point in time because it came down. Here was my BOD, or benefit of the doubt trend line, although I had my preferred trend line like this before. That catches most of the reactions, so I'm going to come back to this one here. The BOD trend line, not enough reactions, and we sliced through and cut it there. So I'm going back to my original trend line. I think this is probably the best fit. Most reactions with one little whipsaw through it and a breakdown and back test. So Microsoft, and what I'm doing here for you, those of you not familiar, I like to go through the top 5 components of QQQ since they're so overweighted. Where these 5 stocks go, QQQ will go, and where QQQ goes, the market goes. So, if you can just chart only 5 stocks out there, you could probably, trade the market successfully without even looking at the charts of QQQ or SPY. But it's nice to look at both. So there's Microsoft breakdown backtest, Amazon benefit of the doubt trend line breakdown backtest. This was the previous trend line I had there, and that one's still probably even more valid. However you want to look at it. Did snap back above that support level right there, 1875. So we'll have to watch that. But again, coming off overbought divergent highs, and I see more downside in these FANG stocks. Apple, nice backfilled the gap today. That's a natural target right there. You had a big gap on Apple, fell, kissed support right here, 182.50, and of course, it was very oversold, so it's natural to get a bounce back, and you can see a reversal right off the top of the gap backfill. That's where I have this line right here. So that one ran into resistance. That's what I'm trying to show you here. Stocks that were oversold, due for a bounce, and have bounced back to resistance. If it pops through there, then its next level is about 197.70 to watch. And Alphabet, GOGL, again, a few days ago, this of the FANGs, this was my favorite. I showed you the in the trading room, at least for members, the 60-minute chart setting up real nice, strong bullish divergence. Hit my first target here, and we're just shy of the second target there, about 1200 give or take. Close enough. That kind of looks a little flagging action, so we'll have to watch tomorrow. I can tell you, the bulls certainly have the potential to take it and run here. For example, if Google pops through there or Alphabet pops through there, it's going to head up here to this next resistance level, about 1234. That would also be a measured target for this flag, roughly. It's a little shy of it, actually. So those are things to watch. And again, if it does that, it's only going to do that if the Qs are going up tomorrow by that much, or at least roughly that much. And to do so means they'll probably pop above today's highs. So these are the things I'm watching for tomorrow. A couple more FANGs. Let's look at Facebook. Go to the daily here. Kind of a mess. I have trend lines all over the place, resistance levels. But here's a stock still well off its highs. Big divergence right here at the recent highs. And I don't have a strong opinion on it, but again, it has work to do because this one peaked back in 2018 and never even came close to that high yet so far, and it's still even below the recent high there. And that's it. That's all I wanted to cover for today. So let's watch those levels, QQQ and SPY, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.